Hello and welcome back to Money Never Sleeps. My name is Bob Cruces from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-97-33627 or visit us online at mnawealth.com, and while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. Think back to perhaps the summer of 2024. The market and the broader economy were stable, and because of that, you decided that you're officially retire at some point in 2025. But now, here we are in the first half of 2025, and tariffs are dominating the news. The market has experienced a significant downturn, and concerns about the economy are on the rise. All of which begs the question, is 2025 still my year? During today's show, we're going to answer that important question. A Kiplinger article, is 2025 a bad year to retire with the stock market in the dumps? So, 2025, not exactly rolling out the red carpet for retirees, huh? Markets are sliding, 401ks are looking a little slim, tariffs are still hanging around like that one guest who won't leave the party, and because why not? Egg prices have jumped nearly 60% over the past year. Who knew omelets would become a luxury item? If you were planning to retire this year, it's totally normal to feel a little nervous. No one dreams of starting retirement with their investments down and inflation up. And with retirement potentially stretching 20 or 30 years, that's a long runway to think about. But here's where we zoom out. Whether 2025 is truly a bad year to retire really depends on your personal setup. How much have you saved? Where will you be drawing income from? And what kind of lifestyle are you envisioning for your golden years? Poolside margaritas or low-key garden days? A financial pro put it like this: if you're planning to live off your principal right away, this might be a bumpier start. But if you can delay tapping into those core savings, maybe live off other income sources, then hey, 2025 might still work out just fine. So don't let the headlines make the call for you. Your retirement timing isn't just about the markets, it's about your goals, your flexibility, and maybe even your tolerance for $9 eggs. Let's talk about something that doesn't get nearly enough airtime, but can make or break your retirement plans. The dreaded sequence of returns risk. Sounds fancy, right? But here's the simple version. If the market takes a dip right as you're stepping into retirement and you need to start withdrawing money from your investments, you might be pulling from your portfolio at the worst possible time. And when you sell low, that money doesn't get a chance to bounce back when the market eventually recovers. Ouch. Now, so far, 2025 is giving off "please proceed with caution" vibes. The markets are dipping, and let's be honest, we've been riding a pretty good wave for a while now. In my opinion, a correction was bound to happen eventually. The key question is, how flexible are you when it comes to pulling money from your portfolio? Because here's the deal. If you're in a position where you have to sell investments while they're down 20%, that's what we call a double whammy. Not only are prices down, but you're locking in those losses just to cover expenses. It's like selling your car during a snowstorm because gas is too expensive. It might feel necessary, but it's probably not the best timing. And here's another trap. When people see their portfolios drop, the instinct is to get super conservative and run for the hills, or at least for cash. But going all in on cash during a downturn, that's like jumping out of the boat mid-storm. You miss the rebound, and history shows, time and time again, that rebounds happen. But those who bailed and locked in their losses, they made the classic investing mistake, selling low and buying high. It's the exact opposite of what we're supposed to do, but emotions can be sneaky like that. And if the portfolio doesn't recover because it's sitting in cash, that could mean having to go back to work. And let's be real, you probably won't land your old job with the corner office and Friday donut perks. It might be more like part-time gig work or something that just covers the basics, not exactly the dream retirement. So, here's a simpler way to think about it. If you could cover your living expenses for the next 2 to 3 years without touching your investments, you're probably in a pretty good spot to retire, even in a rocky market. But if you know you'll need to start selling stocks just to pay the bills, it might be smart to wait it out a bit longer. Give the market some breathing room. Give yourself some breathing room. Remember, retirement isn't just about timing the market, it's about timing your life. Let's next consider the article's good news. Let's be real, stocks go up, stocks go down. That's just what they do. But if you've been playing the long game, saving consistently, diversifying your investments, and keeping your debt under control, then hey, 2025 might be just fine for retiring. Seriously. Inflation? It's actually behaving, for now. The Consumer Price Index for February came in at 2.8% year over year, according to the article, which is better than expected. That's not too shabby. Tariffs are still a bit of a wild card. But before you start packing for that celebratory cruise or digging out your pickleball paddle, the article urges you to do a little financial pulse check to make sure you're truly retirement ready, especially if the market throws a tantrum in your first couple of years out of the workforce. Here are a few key questions to ask yourself, kind of like a retirement readiness quiz, but without the number 2 pencil. Have you been maxing out your 401k and making catch-up contributions? Have you teamed up with a financial pro to help optimize your tax situation? Is your living setup affordable, stable, and preferably not driving you nuts? And maybe most importantly, can you emotionally handle watching your portfolio dip without freaking out now that you're not getting a steady paycheck? A financial services professional quoted in the article recommends running a few what-if scenarios. For example, what happens if your portfolio drops 10% in the first year? Do you still have enough cash on hand to cover your expenses? If you start taking withdrawals from your 401k or IRA and the market stays sluggish, are you still going to be okay? Working with a financial services professional is another way you can answer some of the vital questions that may help you determine if 2025 is your retirement year. And because here's the thing, retirement isn't a financial finish line, it's the start of a whole new chapter. Whether that's traveling the world, spending more time with your grandkids, or finally learning how to bake sourdough without setting off the smoke alarm, it should be something you're excited about. If all the signs point to yes, and you've done the work to get here, then don't let market noise throw you off course. But if you're not feeling confident, or if you're already eyeing next year's retirement numbers, there's no shame in hitting the pause button and waiting a little longer. Retirement should feel right and fun, and maybe even a little bit like freedom. If you have any questions about your retirement magic number, your retirement strategy, or any other parts of your financial strategy, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure. All matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.